Capitalism and the stock market. The stock market and capitalism are deeply interconnected, as the stock market is a crucial mechanism that helps drive a capitalist economy. At its core, capitalism is an economic system where private individuals and companies own and control capital, such as businesses, resources, and investments, rather than the government. The stock market plays a pivotal role in this system by enabling the buying and selling of shares, essentially ownership stakes in companies. This creates a marketplace where businesses can raise money capital from investors in exchange for a share of ownership. In a capitalist system, companies are constantly seeking ways to grow and expand, and they need funds to do that. The stock market provides a way for companies to raise money from the public, allowing individuals and institutional investors to invest in those companies by purchasing stocks. When people buy shares in a company, they are essentially betting on the company's future success. If the company performs well, the value of those shares increases, rewarding the investors. This exchange of capital not only supports business growth, but also promotes wealth creation and competition, both of which are key features of capitalism. Investors seek opportunities where they believe their money will generate the best return, and companies compete to attract that investment. This competitive dynamic encourages innovation, efficiency, and economic activity, as businesses strive to offer better products and services to win over customers and investors alike. Additionally, the stock market plays a vital role in allocating resources efficiently in a capitalist economy. Investors direct their capital toward companies and industries they believe will be successful, helping to drive economic growth in areas with the most potential. For example, if a particular industry, such as technology, is booming, investors will pour money into tech companies, fueling innovation and expansion in that sector. Conversely, companies that fail to innovate or perform well may see their stock prices fall, limiting their access to new capital. Capitalism thrives on the cycle of investment and competition, with the stock market serving as the engine that powers it. It allows ordinary people to participate in the economy by owning a piece of companies and, in turn, benefiting from their success. This democratization of wealth creation is another way the stock market and capitalism are closely linked, as it provides opportunities for individuals to grow their wealth, take risks, and share in the rewards of economic growth. In summary, the stock market is not just a byproduct of capitalism, but a critical tool that makes the capitalist system function. It provides a platform for the exchange of capital, fosters competition, drives innovation, and allows for efficient allocation of resources, all while enabling individuals to participate in the growth and success of businesses. Together, the stock market and capitalism create a dynamic and interdependent relationship that fuels economic progress. Apple Inc. Apple sells shares in the stock market to raise capital, which it uses for research and development, expanding its product lines, and innovating technology. Capitalism in action. Investors buy Apple stock, believing in the company's potential for growth and future profits. As Apple succeeds and its stock price rises, investors profit, further driving economic activity and technological innovation. 2. Tesla went public to raise funds for producing electric vehicles and expanding into new markets. The stock market allowed Tesla to gather investment from shareholders who saw the potential of electric transportation. Capitalism in action. As Tesla delivered on its promises and disrupted the auto industry, the company's stock price increased, benefiting early investors. This growth in value encouraged more competition in the electric vehicle market, which is a hallmark of capitalism. 3. Amazon used the stock market to raise capital during its early years, expanding from an online bookstore to a global e-commerce and cloud computing giant. Capitalism in action. By allowing investors to buy shares, Amazon fueled its growth, which enabled the company to dominate multiple industries. Shareholders reaped the rewards as Amazon's stock soared, demonstrating how the stock market helps businesses scale quickly and adapt in a capitalist economy.